Hello everybody, welcome to this week's live stream. My name's David Jones. Do this every Friday normally at 2:30 in the afternoon, just as the US markets are opening officially. If you haven't attended one of these before, we'll go through a little bit of housekeeping first of all. We'll look at the major announcements for next week. It's a really busy week next week for announcements. We'll take a look at those. Then we'll come back and look at the markets, the big markets, in a lot more detail. And then if there's any markets you want looking at, if you put them in the chat, once we've gone through the normal markets, I'll go through the chat and see if there's anything of interest in there. I thought we'd have a quick look before we get into the housekeeping side of it. I think the move in the NASDAQ this week has been interesting. It felt like, up until yesterday, a bit of a nothing week for stock markets. You can see this here, daily candlesticks, all a bit sideways this week. But I thought it was interesting that yesterday we did see the NASDAQ 100 trade back down to what I think is potentially big support, these lows from the end of Jan, around 11,800. And we've seen it move away. We've seen something of a bounce. So for me, that does still stick with the story that perhaps we could see further recovery for the NASDAQ and other US indices like the S&P, which we'll take a look at in a second. As the weeks go on. Let's see what happens. Anyway, let's just get some of the stuff done, then we can jump into things. Let's get a risk warning done first of all. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment recommendations, investment advice, or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Okay. Like I said, it's a really busy week next week for announcements. It felt like a bit of a quieter one this week. I mean, in the UK, we had a bit of progress on the Brexit stuff, which is still going on. So a bit of volatility in the pound. But next week, I mean, there's a big one, obviously, at the end of the week. But just on Tuesday, we've got the Australian interest rate decision. Then we've got a speech on Tuesday afternoon from the head of the US Central Bank. Mr. Powell is giving a speech. So again, clearly, actions of central banks, because of what's happened with inflation over the last year, are closely watched. Could be some fireworks from that speech if there's any hints about what interest rate changes we can expect in the future. Then Wednesday, we got European GDP. So how well or not is the European economy doing? Canadian interest rate decision. Japanese GDP that day as well. So a big day for major economic performances. Thursday, we got China inflation. Inflation obviously still the big topic. And then Friday, Japanese interest rate decision, which is big-ish. UK GDP, perhaps not so big, but the UK economy, and non-farm payrolls. So next Friday is the US unemployment numbers. So they typically come out on the first Friday of the month, but as it's a short month and because of the timings, they'll sometimes get slipped back to the second Friday. So that's why we have the non-farm payrolls next week, US unemployment numbers. So as usual, I'll be here for the live stream after that. So we'll see how it goes. Pretty packed week next week. There's lots of stuff to watch. I've got a few trades on myself at the moment. I'll talk about those, some of them, as we go through. That's it. Right, quick word from the sponsor, which as usual is me. I run a trading course. There are two courses within the course. There's a course on medium-term trading, which is running trades for weeks and months, and not sat in front of a screen all the time. 12 hours a day, so a more relaxed approach to trading. It's an approach that I've used for more than 5 years now. That's the medium-term trading course. In autumn of last year, I launched the shorter-term trading course, a bit more labour-intensive, but again for me, not much more than an hour and a half a day of looking at markets, but looking to hold position for hours and maybe days. There are 7 video lessons as part of that course. There's 4 live webinars in total direct with me as part of the course, and there's ongoing support via a WhatsApp group if you join the course. So to find out more, if you go to the website, but when it comes to trading courses, I've said before, I'm not a big fan of most of the trading courses out there. I've just spent some time with somebody actually looking at some of the trading stuff on the likes of Instagram and TikTok, and it's all young men in front of Lamborghinis and all that sort of stuff, selling the dream. So I think there's a lot of smoke and mirrors that goes on with trading courses. And I thought, for mine, I thought, well, to show this approach works and I actually know what I'm doing, I'm going to trade an account publicly. And if you've watched the YouTube channel for a while, you will have seen the progress of this last year. So I said I'm going to trade an account using the principles, the strategies I outline in the course. So I traded that from November through to the end of Jan. So November, December, January, 3 months. That was the 3-month performance. So I put £4,000 in the account, a real trading account, real money. I chose £4,000 because I thought it's a number we can all relate to. We might have less, we might have more, but £4,000 trading account delivered about 55% return over the 3 months. I should say, of course, that past performance is no guarantee of future performance. But if you go back and watch, some of the live streams from probably November, December, you'll see the progression of the P&L. And I stopped making it so public at the end of Jan. I said I'm going to do 3 months of this and then go back to my own trading size. I was risking £100 on each of these trades, risking losing £100 on each of these trades. But that's the performance. So that's me putting my money where my mouth is. Clearly, all the trades weren't winners. You can have losers as it goes along. But over the 3-month period, about 2/3 of the trades ended up profitable. 66% win rate. You can see it there. And that was the progress of the P&L. So to find out more, go to my website. I've got Trustpilot reviews as well. David Jones Trading on Trustpilot. So there are 8 5-star reviews kindly left by some of the people who came on the course. So you can go and have a look at those. There's a newsletter, a free weekly newsletter I launched, about a month ago now. It comes out every Saturday. I've got to write the next issue after this. And it's a catch up, what's been going on in markets, what's the hot market to watch in the week ahead, a trading tip in there every week as well, and a bit on my own trading performance, free of charge. If you go to my website, jonesthemarkets.com, and if you scroll to the bottom of the page, there's the box for signing up for the newsletter. So as long as your email's in there before about 9 o'clock tomorrow morning, you'll get the latest newsletter. Any questions, as usual, drop me an email, dj@davidjonestrading.com. Okay, that's it. Right, let's have a look. Where should we start? So what I'm going to do now, go through the big markets, the usual stuff. If you have any markets you want looking at, if you plop them into the chat, and we'll have a look at those once we look at this. But I thought I'd start off with the NASDAQ. I've been long the NASDAQ for a couple of weeks, slightly against me, but it's a medium-term trade. It's not a short-term trade. So on medium-term trades, give the market a bit of room to move around. And I think it's interesting where it's come to. My view on the NASDAQ is this downtrend that we've been in since November 2021 were the highs for the NASDAQ, but the downtrend I want to pick on, that's the wrong colour line to use, isn't it, on a white background? Let's make that a bit darker. Was this, and I wondered, did it break towards the end of Jan? We saw the market push out, the NASDAQ push out to its best levels since about September last year. So I bought a bit of a pullback on the NASDAQ. I've got a loose, wide-ish stop on it. But I thought it was interesting that yesterday the NASDAQ carried on selling off a bit, but held above these old lows around 11,800, the lows from the end of Jan, before we did see the market springboard up 1,000 points. So I wonder if we're going to see it again. Let's see what happens. But I think that's an interesting level to watch next week for me in the NASDAQ. So if we are going to see this recovery continue, I really don't want to see the NASDAQ, dropping much below 11.5, 11.8. So let's see what happens there. So I thought that's an interesting one next week. Sticking with stocks, if you have a look at the S&P, similar move. I was actually thinking about going short the S&P this afternoon, but we do have the recovery in the S&P, the broader US stock market index. That's still going from October last year. Again, interesting. Yesterday, as with the NASDAQ, we saw the S&P drift back to this 3-month trend line, and we've seen it bounce so far. It's only a day. Let's not get too carried away. But if a trend is going to continue, that's the sort of thing really that we want to see. So that's what's happened so far. So for me on the S&P, about 38.80 or thereabouts is the level to watch. Oh, I should mention actually, I did a bit of an experiment yesterday on YouTube. Put up a video, which is free to watch. It's an hour and 10 minutes long, because I know I talk a lot about technical analysis on these videos, and I appreciate that for a lot of people, perhaps they're new to it. So I've put on a crash course to some of the more popular technical analysis stuff, so you can watch that at your leisure if you want to. So that's on the site. I mean, there's obviously much more to trading than technical analysis. Otherwise, everybody who learnt about charts will be all making money. And we know that's not the case, but have a look at that after. Anyway, so S&P, nice recovery, still going. Let's see. I think interesting week next week to see if these stock markets do get their backsides into gear and start some sort of recovery. Let's have a look at the Dow as we're on the US market. So the Dow Jones, a little bit different to the NASDAQ and the S&P. We've been ranging for, what's that? About 3 months in the Dow. But again, over the last couple of days, we've seen the Dow fall to the bottom of the range, around 32,500. We've seen the market bounce back a bit off that. For those of you who are fans of the squiggles, the RSIs, we have seen an oversold RSI on the Dow. So it's all pointing to markets having a bit of a rally, US markets having a bit of a rally from here. But let's see. We'll have a look where they are this time next week. We take a look at the FTSE. I think it's been a bit flat, the FTSE. So the FTSE 100, the UK market, great performance over the last 6 months or so. The FTSE pushing out to its best levels ever. So fresh all-time highs. So for me, the trend on the FTSE, absolutely still up. If we saw US markets move higher, probably expect to see the FTSE dragged a bit higher as well. Lots of support at around ahead of 7.7 on the FTSE. So for me, it's only if that level broke would I start to worry that the FTSE was coming to the end of this trend that started in October. The DAX, the German, a bit sideways really for much of February. Not quite sure why my lines are all defaulting to yellow, but anyway. But again, the trend is still up. Similar story with a lot of these markets. Trend is still up on the DAX. Had a little wiggle yesterday, below 15,250. We've seen it bounce back today. So all positive, I think, for stock markets at the moment. But let's see what happens next week. Let's take a look at some other markets. Let's take a look, first of all, at oil. Oil, it's the same old oil. It's it's still in this range. Nothing has changed for oil. Let me just take those two lines off. So looking on the dailies, just doesn't know. Doesn't know whether it wants to start a big recovery higher or doesn't know if it wants to start breaking lower. So we've been stuck in the range now for 3 months pretty much. So on the top side, 83.75 or thereabouts. This is the WTI. This is the US oil, West Texas oil. 83.75, can't get through there. And on the downside, any weakness towards the low 70s, the buyers come back out and it's just bang, bang, bang. No change. So, there are some sort of tradable opportunities within the range if we flip it over to an hourly. You can see whenever we go down to like 73 this year, we've seen the buyers come back in, dipped below 74 a week last Wednesday, and we had a $4 move off it. But just on the dailies, the bigger picture view, pretty dull, price of oil. So, it will break out one way or the other at some point, but not today. Or probably not today. Anyway, unless we see a 10% move one way or the other. Now, natural gas, the old favourite. This is interesting, natural gas. I mean, natural gas is always interesting, isn't it? But it's interesting. It's interesting what's happened over the last week. So let's just remind ourselves the story of natural gas. A market with seldom a dull moment over the last year or so. So we saw the run up in natural gas last year to $10 or thereabouts in August of last year. Plenty of people on the way up trying to go short, getting toasted, and then plenty of people on the way down, trying to buy the dip, also getting toasted. But the move we've seen over the last week, if I was going to be a pedant here, right, I was going to draw a trend line on natural gas, then I could absolutely argue, look, that's the big trend on natural gas. And until natural gas gets above about $4.70, the big trend is still down. And that is absolutely the textbook case for natural gas. But if we zoom in to the latest plummet in the gas price from mid-December last year, these are daily candles that we're looking at here. And you can see rallies do not last very long in the price of natural gas, which makes what's happened over the last week or so even more interesting, I think, because what we're seeing in natural gas, here we go, if I zoom it right in, we're still on the dailies, we'll take a look at the short term in a minute. So this is February. So we saw the market sell off 22nd of Feb down to 206. And then we've seen this massive rally. So we've seen the market trade up to 280. And it's taken out a fairly significant, reasonably significant short to medium term high, because it was the high, this was the high before the market plummeted again. So, there's absolutely a couple of ways of viewing this now. And of course, there are always two opinions in a market. Otherwise, markets would always go in one direction. There's always an argument to be a buyer or a seller. So if you wanted to make an argument for being a seller of natural gas, you could absolutely say, well, listen, the big trend is still down. All right, we've seen the thing pop up, but every time we've seen a major rally in natural gas since August last year, it's just got slammed again. So you could absolutely view this as a rally to be sold into. Yeah, go short up here. Natural gas is trading up around 275. Let's go short and wait for the next plunge lower in natural gas. And for me, if I was going short up here, then I'd probably be looking to put my stop somewhere above $3 because it's a volatile market at the best of times, natural gas, as we know. But you could also take the view, well, hang on, this rally is a little bit different to what's been going on since December, because this rally actually has taken out the previous high. Previous rallies, if we flip it over to an hourly chart, previous rallies were getting nowhere near major highs. It have a little bit of a bump higher for a couple of days, then sell off. We are seeing a much more sustainable rally than we have had for quite a few months in natural gas. So you could also take the view, this is the turn. This is the start of the next great natural gas bull market. This may be over-egging it a bit, but you could take the view, well, listen, this is different. We're going to see the price move higher. So I suppose for me, if I was a buyer now, so if I'm a seller, I put a stop above $3, and I would probably still lean that way, still lean to being a seller. But if I was a buyer here, I wouldn't want to see it drop much lower than $2.50. So if somebody said, right, you've got to buy natural gas, I'd put a stop below $2.50. So we could get a bit of volatility. But if it slips below there, it looks like it's giving up the ghost again. So it's a really interesting market. Let's just go back to the dailies and have a look at the RSI. Let's put the squiggles in. So here we go. So we had on the RSI, the thing was oversold for ages, obviously, because it was going down and down every day. And not surprisingly, because it's had a half-decent rally, we've seen the RSI get dragged up to the highest it's been since here, where the rally ran out of steam and fell off a cliff. So really interesting market. So for me, I'd still be leaning to be going short, but I do wonder, because we have broken through the highs from earlier in Feb, is this perhaps the first step in the trend changing? Really interesting market to watch next week. But let's see where it is next Friday. So that's natural gas done. Let's take a look at some of the currencies. I hate to use the word interesting again, but there's a lot of stuff going on. I do this WhatsApp group for those people on the course, and there was a whole load of markets I highlighted today because there is some really interesting stuff going on. Let's start off though with the euro against the dollar. So the euro against the dollar, I think I've said all the way up here, I want to be a buyer of a dip in the euro. The only question is, how far does the dip go? Okay, so just to remind ourselves, let's get rid of that line. We had been in this downtrend for some time, for the euro against the dollar. You know, I picked up on the downtrend from Feb last year all the way into October of last year. So we saw, you know, pronounced sell-off from 115 down below 1 for the euro against the dollar. Then, you know, last year, October last year, we saw, well, perhaps things are changing. We start breaking out through the trend line, starts moving higher. This starts looking like an absolute breakout and the start of a trend reversal for euro dollar. This would have been about mid-November. And since then, we've seen this market just continue to push higher until recently. And if we just take things out and bring things up to date. So this, for me, is why it's interesting here. So we had the, you know, when it was pushing up after the trend line break, sells off in early Jan. So these are the lows for the year for the euro, 104.80. And then it runs up 500 points plus from there, from that 104.80 level. And we've sold off. You know, it's been in reverse all the way through Feb because of the strength in the US dollar. But we've seen a bit more strength for the euro come back in over the last week. And we've seen it hold this old low at 104.80, hold again. So I wonder, is this the start of the bounce in the euro? And if it is going to be the start of the bounce, then the target for me would be a run back up to 110. You know, because if I'm expecting this trend that's been going since the October lows or late September lows, whenever, if I'm expecting that trend to continue, then the obvious target is at least a run back to the old high. So that's another interesting market to watch next week. So for me, 104.80 is a little bit the line in the sand for the euro. Let's see what happens. But another one I think to keep an eye on next week. What else is it? I mean, a lot of these FX pairs look reasonably similar. So Aussie dollar is another reasonable example, because I mean, so much of this hinges. I mean, it all hinges on whether the dollar starts to sell off, the US dollar starts to sell off, right? But if you look at Australian dollar, US dollar, you know, similar sort of setup to the euro, hits a high in early Feb, the Aussie dollar against the the US dollar, then spends all of Feb selling off, but we've stabilised ahead of the lows for the year, which is 66.88 in the Aussie dollar. So interesting. I think, what's the RSI look like? RSI is saying buy. So the RSI went oversold third week of Feb. First time we've been oversold on the RSI on the Aussie dollar since October. So there you go. So there's a whole load of things against the US dollar to watch next week, which brings me to gold. So there's another one. So gold had, you know, we saw the lows. So gold had a really a bad year last year from March onwards. You know, we saw the surge on the Russian invasion of Ukraine. Gold could not take out the previous highs, the previous all-time high from 2020. Sells off, so hits 2070, sells off, but did make a base in September, October, November of 2022, down around 1630 or whatever it was, 1620. Then we had this great run in gold up until, again, at the beginning of February, like all these other, like the likes of the euro, and then the US dollar strength started coming back in. Then we've seen gold drop from highs of about 1960 an ounce in early February, down as low as $1,805 an ounce. So it's a big fall, not quite 10%, but about 7% fall in the price of gold during Feb. And again, I wonder, well, are we seeing this weakness in gold coming to an end? And once again, it all hinges on what's going to happen with the US dollar over the next couple of weeks. But I think this is another interesting market to perhaps we'll see it start to turn around. If we flip over on the hourlies, I mean, for me, 1850-ish is still a bit of a problem area for the price of gold. So if you really wanted to go short gold, if you thought the dollar was going to have a bit of a comeback next week, it's a great zone for me anyway to go short gold up here. Go short, put a stopper, I don't know, 1860. So you've got $20 risk. And if the thing sells off to retest just the levels from the end of Feb, there's maybe $50. No, not $50, $30, $40 in the trade. So lots of stuff versus the US dollar to keep an eye on. And of course, as I've been talking about the US dollar, Let's take a quick look at the dollar index. So this is why, this is the dollar against a basket of different markets, and we had this really strong rally. It moved about 4% higher, the dollar index in Feb. I'm short the dollar index at the moment, so I am positioned to profit if the dollar index does fall from where we are now. That for me is the line in the sand, 105.60. The highs from beginning of January. Let's see what happens. So many other different markets all tied in to what might happen with the dollar in the days and the weeks to come. That's it. What else have we done? So we've done indices, we did energies, we've done a bit of FX, did gold. Oh, I didn't do silver, did we? Obviously, I hate silver. Every time I look at silver, I've got to say I hate silver. But still, silver again is another market. We've seen this big sell-off from Feb highs, 24.60, and it was a big sell-off again in silver, down to $20.40. So it lost $4.20. So it dropped 15% from the highs. But again, if you really wanted to be a buyer of silver, we do have these old lows left on the way up, around $20.40 or thereabouts. So for me, that would be the line in the sand I'd be watching for silver going into next week. So let's see. Lots to keep an eye on. Let's have a quick look at the old Bitcoins. Haven't looked at those for ages. Let's have a look at Bitcoin. For me, it's the same old, same old. I think I've said on numerous occasions this year, after that rally we had, I would be looking to go short. The reasons I'm looking to go short, the psychology, if it starts falling, I think a lot of the Bitcoin hodlers, perhaps they're more later to the party hodlers, might decide to dump the coin for a bit. So for me, still, not much has changed on Bitcoin. I think it's interesting if we get a more pronounced sell-off below, let's say, 19, 18,000. Does it hold? Do we see the buyers come back in? So that for me is the interesting thing in Bitcoin. Let's see how it plays out. See what happens. So nothing too exciting up here, but I do think, I've said on numerous occasions, I think this 25, 26 area is going to be a bit of a ceiling for Bitcoin, just based on the trend, market psychology, and just general nervousness in this market, and nothing has happened to change that for me on Bitcoin. So yeah, it's if it comes under a bit more pressure, then it starts to look a bit more interesting to me. So interesting stuff I've got on. I've got a sugar trade on. I think I saw Nick mention sugar. So yeah, sugar's nearly 5-year highs on sugar. So I have been long sugar as a short-term trade. I think it's been my biggest winner for the last couple of weeks, sugar, looking at where it was before I started this. So 5-year highs on sugar. Well, there you go. Look at that. So almost, we've got it. If it breaks this level next week, that'd be nice. You've got a bit of a move on. What's the high? 21, let's call it 21.80. And that would be the best levels since November 2016. So it'd be 6.5-year highs, isn't it? But a bit of a problem area at 24. Let's see. But that's been a good trend. The old sugar trend. The other good trend, sticking with the agriculturals, is soybeans. Where's my soybean market gone? Here we go. Lovely little trend on soybeans at the moment. So chugging away. Hang on a second. Let's just get rid of that so we can see the trend nice and clear. So it's been a good market for me in the past, soybeans. Haven't traded it much lately, but did trade it quite a bit here on the way up. Great trend. And then all a bit crazy since then. But we've had this trend in soybeans going since July of last year. 4th touch of the trend line, I'm going to call that. Maybe even the 5th over the last couple of days, the last week or so. Interesting to see if that trend continues. As for the last couple of days, let's see if it gets a bit of a move on from here and see where we go next. Right, so that's it. That's the markets I wanted to look at. So loads to watch. Everything is interesting at the moment. So Nasdaq has a little blip off the late January low yesterday. Loads going on with the currencies. Euro dollar I think is the interesting one for that. After holding above the January lows. Similar with gold. I wonder if it might come under a bit of pressure, but Is this 1800 area going to be something of a line in the sand for gold? And natural gas, of course, never a dull moment for natural gas, but having, for once in a long time, pushing through a previous significant-ish high. So loads to watch and loads, absolutely loads happening, next week. I mean, the big one is the payrolls on Friday of next week, but an absolute chunk of stuff in here leading up to the payrolls anyway. So a whole load of stuff to watch. So that's it. We'll take a look at the stuff you want looking at, but just a quick reminder to sign up for the newsletter. Go to my website, jonesthemarkets.com. Sign up for to join the trading course, the short-term and the medium-term stuff. Details on there as well. More details about the performance, why this course, any questions, all of that. But drop me an email if you've got any questions anyway. dj@davidjonestrading.com. Right, let's have a look at some of the stuff you would like to look at. Hold on a sec. Let me scroll back through the questions. Zoom is waiting for the next pandemic. Let's have a look at Zoom. Zoom video communications, isn't it? Let's have a look at that. That's an incredible story, isn't it? From obviously did fantastically well during the COVID times. So where was it? Jan 2020, $75, touches nearly 600, and here we are now back down at 70. Yeah, so that all we need is another global virus that locks us all down, and it'll be happy days again for Zoom, wouldn't it? I mean, it's a bit uneventful. I suppose you could take the view, if you wanted to trade it and if you wanted to buy it, if I had to buy it now, we saw the lows in December down around 63. They're trading at 70 and a bit at the moment. If I was a buyer now, I would absolutely have my stop the other side of 63, because if it goes through 63, we're on another multi-year low, aren't we? So it's perhaps not the most interesting one at the moment. Pretty volatile though. Just this year we've seen it go from 63 to 84 and back below 70 again. It's a lot. There's a 30% swing in just the first 2 months of the year. So it's a pretty volatile stock. Yeah, that's it. So 63 for me on Zoom is the interesting one. We looked at the S&P and gold and the FTSE. Can we have a look at First Solar? First Solar, FSLR. Oh, what's that? Hang on. First Solar, NASDAQ. What do they do? Electronic technology and semiconductors. Okay, they've had a great run, haven't they? Wow, look at that. So I always say, when I look at these, I always have a problem with these runaway markets. I think like most people, I'd much rather be a buyer down here. But back in July, they were $70. And here we are at 204. Absolutely, the trend is up, isn't it? So the trend is up in First Solar. The only question for me, and it's always the question for a trade or an investment, where's my stop going? If I'm wrong, where am I coming out? That was nice. That was a lovely little Harry Hindsight trade there. If you go back, when was that? On Tuesday of this week. Little trend chugging away, comes back down, tests the trend at 160. Be a buyer, stop the other side of 140, and bang, here we are at 204. So for me, trend is up. I'd rather buy a dip, is my standard line on these, isn't it? I'd rather buy a dip rather than getting sucked into any sort of FOMO, fear of missing out. But it's had a cracking run the last 3 days, and yeah, the risk is I wait for the dip never comes, and the thing is trading at $400 in 6 months. But there you go. But for me, it's a buy the dip stock, but you cannot argue with the trend on that. It's really done fantastically well, hasn't it? What do you think about the coffee? Will it go up? I've been watching coffee. I've not put a trade on coffee yet, but I do want to be a buyer of coffee personally. And the reasons why, let's just make these lines a bit clearer. So to walk through the stuff on coffee, it's so it's sold off. It's sold off from these highs, August 2022, about 240. I think it's 240 cents, whatever it is, down to 145. And we had this recovery in coffee. And for me, the bet in coffee, the trade in coffee, again, there are two ways of looking at this. Do you take the view, right, this downtrend is over. The market had been in a downtrend. The downtrend is now finished. And we need to load up on coffee. So this is just a buying opportunity. This weakness now is a buying opportunity. Or do you take the view, well, actually, this is a bit of a false break and it's going back to $145? That for me is the decision to make on coffee. So for me at the moment, I am leaning towards buying the dip on coffee. And it's all about, in the short term at least, what happens at these old lows. So the lows from the beginning of Feb, 170, 150. You can see it there. If we saw a bit of strength ahead of there, I'd be a buyer with the stop loss the other side. Let's see what happens. But completely valid to say, well, actually you're wrong, and the big trend is still going to be down in a minute. So let's see what happens. But it is one I do look at every day, coffee, and I'll be quite interested to see what happens near those February lows. Let's see what happens. What do you think about? We did coffee. Alexandra stock, ticker ARE. Let's have a look at those. Alexandra Real Estate Equities. So it's a real estate investment trust, yeah? Let's see. We must have looked at this before, actually, because I've drawn some lines on it. So there must have been a reason. This is another instance. I think everything's interesting today. We always need to do like a 2-hour live stream today because there's so much interesting stuff to look at. So on this one, this is another one, right, where you could take it both ways. Okay, so if you could look at this. So I've gone back a bit in time to the end of January. So the trend on this one had absolutely been down since December 2021. So we were a year into this downtrend. And you see the market breaking out the downtrend. But you could take the view, actually this is a false break. I'm going to go short. I don't believe this break. And you would have been reasonably well rewarded for that so far. That would have done well, going short. But if you believed it was the change of the trend, which you can sort of make the argument for, be a buyer now. So if I was a buyer now, I'd be a buyer now at 143.60, where they're trading now. And again, I would want to go for a stop loss at the extreme. So a stop loss down here. The other side of 127 to 126, whatever it is. So that's a really interesting one to watch, and you could absolutely argue it both ways. I wouldn't probably buy it today, but I think if we see a bit of strength on Monday, does it look like it's holding above this old zone before the breakout? So yeah, let's add that. I'm going to add that to the list of interesting things to keep an eye on. So that's that. If you want to win big, I can tell you my moves and do the opposite. That's what I think would be true for a lot of people, actually. But yeah, but it's not as easy as that though, is it? Because you've still got to manage the risk. Because it is, I think, in the early days when I started trading, you think, well, even if you had a system that was wrong 70% of the time, and we know that 70 to 80% of people lose when they're trading. If you had a system that was wrong 70% of the time, all you got to do is do the opposite of it, don't you? And you think you've got a winning system, but then it's managing the risk the 30% of the times the system is right, because you could give back all your profits and more. If this is the bottom for the S&P, I can't get my head around how it could be the start of a new bull market and we go to levels past 6,000. I think that's a perfectly sensible comment. Absolutely. Maybe, I mean, 6,000 would be a 50% move on the S&P from where we are now. So it doesn't necessarily have to go up 50%. I mean, it did. Off the pandemic lows, it did end up more than doubling. But if we took the pre-pandemic high at 3.4, well, I suppose actually it did go up almost 50% from there. But I would say, I mean, if there's one thing I've learnt over the years, and there's more than one thing I've learnt, but if there's an important thing I've learnt, is markets can go much further in both directions than anyone thinks they will. So personally, I wouldn't get too hung up on where the S&P is going to go. And maybe, if let's say this is a new bull market in the S&P, it doesn't necessarily mean we're going to go up at the same rocket rate we went up in from March 2020 to Jan 2022, does it? We might just go up at a bit more of a steadier bull market, right? I mean, you can see I've only gone back as much as the data allows me back to 2010. You can see that was a particularly crazy time for stock markets. Perhaps we have a more relaxed, maybe a bit like this sort of period here, 2014 to 2015, where it sort of nudges a little bit higher, but doesn't go crazy higher. Who knows? Rivian. I was reading an article, I didn't read it properly, about Rivian, about how much money they're burning through. So Rivian is the, let me have a see if I can get the article up. So Rivian is the electric vans, isn't it? It's not, is it cars or is it vans? Electric adventure vehicles. Oh yeah, that's, I remember what they look like now. There you go. It's quite a funny, funky looking thing, isn't it? But they're burning through cash, I think. Like there's no tomorrow. Let me see if I can find the story. there's a story in Reuters yesterday. EV startups from Lucid to Rivian see demand fade, supply chain issues longer. They missed revenue expectations. That's why it was in the news. Anyway, let's have a look at the stock price. Wow, look at that. So Rivian came to the market late 2021. Good timing, just before the top. 180. Trade, it hit 180. And here they are, down at below $17. So they missed on their earnings. I suppose an aggressive trade here, if you think the market's overreacted. So on their earnings, they hit $19. And then earlier this week, before earnings, then the earnings came out and they missed. An aggressive trade, if you thought the market had overreacted, be a buyer. With a stop probably the other side of $15. It's probably not one I would do. You know, because the trend was pretty much down anyway still for Rivian, despite a bit of excitement in Jan Feb. So I'd be a little bit, personally, it's probably not one for me. But that would be if you absolutely wanted to roll the dice on Rivian, taking the view that maybe the reaction to the results has been overdone. That would be one thing to do. Aussie dollar, New Zealand dollar, AUD, NZD. Let's have a look at that. So what are you saying? Please check. Decent dip to 108. Yeah, this is another one that for me, you could absolutely construct an argument both ways. I'd still be willing to give it the benefit of the doubt and having a bit of Aussie dollar strength, but you could absolutely say, look, the thing has fallen out of its uptrend, fallen out through a previous major low from late Jan. Sell the rally. Okay, that would be one way of trading that, to be a seller of the rally. I would be tempted to think that maybe we'll get another squeeze back up to 110.50, 111, and I'd have an appropriate stop on it. But it's an interesting one. Another interesting one. Like I say, there are loads of them at the moment. Have a look at McDonald's. Okay, McD. Boring, I think, isn't it? I mean, I think it's had a good run over the years, absolutely. Particularly obviously off the old the COVID lows when everybody started doing their living off takeaways from Deliveroo and the likes. It's a bit boring, isn't it? And it had the breakout. It did break out. When was that? October last year, and it's just gone nowhere. I'd still be tempted to be a buyer of the dip, but I mean that, you know, that's the last year and a bit for McDonald's. There's just not a lot going on, is there? So yeah, not much for me in that one, to be honest. Coca-Cola was another one mentioned. Hold on, Coca-Cola Company, pretty much the same, isn't it? It's just boring, isn't it? In it. It's I mean, it's in the middle of the range, isn't it? It's you know, we've ranged from $66 to $54, pretty tight range, relatively speaking, and here we are at 59. So we are pretty much bang in the middle of the range. I'd probably be more short than long at the moment, based on a much shorter term chart, but from the dailies, not a lot doing for me on the daily chart for those two. So yeah. Can we have a look at Alibaba? Yeah, let's have a look at those. The old Chinese Amazon, isn't it? China's Amazon. I think they're in recovery mode, aren't they? From when we've looked at them before. Oh, they were, but they're not. Oh, hang on, that's the wrong chart. Look on the dailies. I would be. Where's these yellow lines? I'd be a buy of the dip, I think. So I would take the view. I mean, it's fallen out of that trend, that recovery trend it'd been in. But I would be, arguably, be a buyer even now. You know, with a stop the other side of 85. So basically speculating these old lows following that big downtrend that had been in place for a long time. October 2020, been in place for 2 years, that downtrend. I'd be taking the view that maybe we'll see a bit of strength come in ahead of 85, but that's another interesting stock, actually. So let's add that one in to the list. See if 85 holds on Alibaba. What would you do with JD Sports? JD Sports, who own pretty much all the high street now, don't they? Or is it Sports Direct? I always get confused. JD Sports, it's difficult, isn't it? I mean, for me, it's a buy the dip, but I mean, the range has been nothing for a month, isn't it? So if you were a fan of patterns, which I'm not a fan of patterns, you'd call that a pennant thing or a flag or whatever they're called. I mean, the trend has been up since October. So I'd be a buyer of the dip, but it needs a fair old dip from where it is now. So for me, I'd probably rather wait and see, does it make its mind up and break out higher or break down lower? But yeah, there's not a lot doing for me in that one. We looked at the DAX. If you missed any of the stuff I covered in the beginning, like the DAX, once this live stream is finished, the recording is available straight away and you can watch it on YouTube. Dollar yen, yeah, I have looked at dollar yen. And I haven't looked at it in this live stream, but I want to be a buyer of dollar yen. Again, if we get a bit of a sell-off. So for me, I do think that we've seen the downtrend over, had a good trend. I'd rather see a decent sell-off rather than the nothing sell-offs we've been having. But I'd absolutely be a buyer of the dip on dollar yen. So let's see what happens there. Google, what's Google doing? They got hit the other week, didn't they, with the whole chat GPT AI doodah thing? Like I know what I'm talking about. It could be tempted to be a buyer of Google. I mean, it's whether you think this is. I would buy it. There you go. I'd be a buyer at 93 with a stop under whatever that low is from November, 83. So I think that's an interesting one. It's come off. It's halved. Google, interesting, since Feb last year, pretty much. Not quite halved, but almost halved. I'd be a buyer. But if it broke below 83, I'd be out, and maybe even be short. But I wonder, is it trying to make a base and stage a recovery down at these levels? Let's see what happens. Tesla. He had his disappointing investors' day, wasn't it, this week, old Mr. Musk? Because I think people were waiting to see if they were going to announce like a Volkswagen Golf-sized Tesla, and I don't think they did they? Oh, it says, the FT says it is gearing up for a more affordable model, but I don't think he delivered. You can see it in the price here. I don't think he delivered what people were hoping for. I'd be a buyer. We've had this uptrend in Tesla. So for me, if I was a buyer now, the absolute closest I want my stop would probably be the other side of 180. I do wonder though, after that, fantastic run off the lows from the year, let's not, look at the percentages here. Tesla stock doubled in about 6 weeks. Are we going to see it double again from here in the next 6 weeks? Nothing's impossible, but I wouldn't have thought so. I just wonder if it gets perhaps a bit choppy now. But for me, I'd be a buyer of the dip. So I'd rather see a deeper dip, but it does look like we've broken the back of that downtrend that had been in place from the 300s in Tesla. Are you still only investing in the S&P for your pension? Mainly, I do a bit of stock stuff, but mainly S&P tracker, which is that one, is it? That's a NASDAQ tracker. That's the S&P tracker, and a NASDAQ tracker as well. I do have some stocks in there, like HSBC. That's done well recently. Don't know why. Don't care. But yeah, for me, mainly, I don't do so much with individual shares, but I just do a few, just track the market, which is why for me, I do hope that we have a bit of a bull run again in the NASDAQ and the S&P. Right, what else? Gartner Group, ticker IT. Let's have a look, see if that, there we go, Gartner Inc. How are we doing for time? Got a bit of time. Pretty boring, isn't it? pretty. But what would you do? I mean, what would you do? I mean, from a short-term trade point of view, if you flipped it over to the hourlies, you know, we God knows what went on there. Earnings, there we go. So they spiked lower like a maniac, beginning of Feb, down to 322 on the earnings, and then ran back up to 356. Big move again, big swings. So based on the hourlies, it'd be a buyer as a trade to see if it's going to run back up to 350. But based on the dailies, not a lot there for me, really. Yeah, even though, you know, absolutely the trend is up. It's just been a bit sideways, isn't it, since November of last year. So nothing too exciting. Remitly, never heard of those. Who are they? Remitly Global. What do they do? Commercial services, miscellaneous commercial services. Let's have a quick Google. Financial services company. Send money online. Okay, fair enough. Are they quite a small company? Okay. Slightly different pictures. Then you look at that and think, well, that looks quite bullish. Then you look at that and think, oh, okay, maybe not so. Maybe it's breaking out though. You know, we saw it. So came to the market back here, September 21. There's been one-way traffic since then. It's done nothing much, but it has started breaking out. So it's whether you believe the breakout, isn't it? And I think, you know, I'm always a bit cautious with some of these, what I'm guessing is a smaller stock now. Let's see what their market cap is. 2.6 billion. Oh, they're not tiny, but by US standards, that's probably fairly small. Do you believe the breakout? That's the thing. So if I was a buyer now, and I don't think I would be, I would want my stop, you know, a long way away, probably down at $11. And with the stock trading at 15, it's like a 25% stop loss, isn't it? So for me, interesting that it's broken out after being in this big sideways thing for about a year now. So maybe it's the start of something big for Remitly. But personally, I don't trade stocks anyway. But I'd be a little bit more patient. But let's see. Let's come back to it and see what happens. Tesla, Apple. I haven't looked at Apple for a while. What are they doing? Apple. Pretty boring, isn't it? Pretty boring. I mean, that was a nice trade. Another Harry hindsight trade. Nice short, where it traded back almost bang on to the high. So the high from October last year at 158, banged up into it, and has sold away again. I must admit, I mean, long term, absolutely, you'd have to say the trend on Apple. You know, if we go back to 2008, that trend is still up. It's just in the last 4 years massively accelerated away from it. Bit sideways over the last year and a bit. If I was going to do a short-term trade, I'd look to go short again up here if it pushes back up to the mid 150s. So nothing too exciting from here for me. But interesting that 157.5, 158 level, it can't get through it. My best stock lately has been a corner store and a fertilizer agricultural co on the TSX. What's that? Is that the Tokyo Stock Exchange? I don't know. Let's have a look. Let's see if it brings it up. ATD.A. Doesn't like that, does it? Oh, there we go. It must be that one. Alimentation Couche-Tard. Très bien. Lovely trend. That is a lovely trend, isn't it? So yeah, it's stocks like this are perfect stocks. Of course, they're hard to find, but when you lock into a trend that just carries on up. I've not drawn that very well. That one has, and just has the odd dip along the way, and away we go again. And AFN on the TSX. What's AFN? AG Growth. Wow, look at that. That was a good one, wasn't it? Big breakout on that from wherever. Because that was a real, so I'm guessing these are Canadian dollars, aren't they, rather than real dollars. But so $48, 48 Canadian was a big level for a long time, going back to Jan 2020. And the breakout breaks out and away we go. So yeah, a couple of good stops Good stops in there. Metals, any idea? That's a bit of a vague comment, that is. We've done gold, we've done silver. If you missed that, you can watch it when it's available on the rewindy thing. And that's it otherwise, isn't it? We're done there. So there is a whole load of stuff to watch next week. Stock indices for me, interesting. This NASDAQ thing is carrying on a bit today after the move down to the lows. Let's see. Let's see what happens. FX is interesting. Euro, US dollar holds above the lows. What does next week bring? Natural gas is interesting because we all know it's a nutcase market, but it has made a bit of progress through the highs. The first time we've seen that since November. Let's see. I think someone's just said, do you think it makes sense to trade the VIX when it hits the bottom? I have never traded the VIX. I can never imagine trading the VIX. It is a market that I will look at now and again because I do trade S&P options. I think the problem with the VIX is, and the VIX is the volatility index, often referred to as the fear index. So when the VIX is high, like here in COVID times, a lot of fear in the market, not surprisingly. When the VIX is relatively low, the market is fairly relaxed, and the VIX is relatively low now. I think the problem you got with the VIX is it can stay low for a long time, you know, and you suddenly get these sharp moves, and then they're over again. So it's not a market I trade. I'm sure there are people out there who trade it successfully, but it's not one for me, is what I would say about the VIX. So that's it for now. So we'll wrap things up there. Don't forget, newsletter goes out tomorrow. As usual, a hot market to watch. It'll be sport for choice next week, to be honest, but hot market to watch for next week, and a trading tip in there as well. Go to the website to sign up, jonesthemarkets.com. Any questions, drop me an email. My trading course is on the website. Read the Trustpilot reviews, read all the other stuff about them. Best trading course out there because it's actually real and I've traded it with real money. But all the information is on the website. We'll wrap things up there. We'll do this all again next Friday after the payrolls. So 2:30 next Friday, and see where we are with markets. So until then, good luck with your trading and hopefully see you next week.